Yo, what's going on, guys? It's Arkham, and I'm gonna break down this trade that I took this morning on the S&P 500. Overall, break down my bias, where I got in, where I got out, and my overall analysis and thought process throughout this trade. But before we get into the video, make sure you guys are following me on Instagram. Tons of breakdowns, tons of analysis, and this is where you can find me, and this is where I also post my trades as I take them as well. Coming into a market here on the H4, we're stuck in this range here between this bearish H4 order block as well as this bullish H4 fair value gap. So overall on the H4, I was a little neutral on the day. Despite me being neutral, I did lean more towards the buys than I did the sells today. And the reason why I leaned towards the buys more was because the overall trend of the market has been going higher, and it's been a struggle to actually short the overall market because of this, especially with yesterday's price action, which despite being overly bearish, the market would rather consolidate than go lower. So coming into the market today, I was bullish simply based on the trend of going higher, but I was also opened to shorts if I were wrong. So my overall idea coming into H4 was if we could get a push up into this bearish H4 order block and then show rejection and maybe a pullback, then I will go short. But if we do find support here at this overall bullish fair value gap and then we do push higher above this H4 wick and then find longs, and I would go long. So overall, I was neutral on the day. Coming into the market here on the H1, as you can see, we do have a SMT divergence here, which is essentially a divergence between multiple correlated assets. So the correlated assets for the S&P 500 is the Nasdaq and the Dow Jones. The fact that the ES didn't take out this high of week while the Dow Jones and the Nasdaq did overall gave me confirmation that price is finding a level of resistance at this H4 order block. Coming into H1 here, we do have a SMT divergence, which is essentially a divergence between correlated assets. So the correlated assets for the ES is the Nasdaq and the Dow Jones. As you can see, we have this 6 p.m. Sunday, October 3rd high, which ES actually failed to come down into, but the Nasdaq actually took out that high as well as the Dow Jones also took out that high as well. So overall, that's divergence, meaning that the overall S&P 500 would be more likely to be bearish, and that was overall a really good signature as well as being inside of this H4 order block. I was leaning more towards the downside as the market then opened. Coming into M15 here, as you can see, the market opens up and drops after tapping into that H4 order block as well as creating that SMT divergence. So at this moment, I'm a little bit more patient. Even though I was bullish on the day, this isn't the type of signature that I essentially want to be looking for when I'm bullish. So I want to be patient. I want to see, is price respecting these zones? Is price giving me a bullish setup? If not, then I will go into a counter bias, which is essentially, us coming down here, breaking below this level, this support level here, and then coming back up. And if I get a retest, then I would likely go short. So that was the plan coming into our market this morning. If price was to find support at this level and push higher, and I could see it pushing higher, then I would take longs. But if price were to break this level and overall give me a setup that was short, then I would likely take that short. It's all about having a plan and having a counter plan. It's all about if then statements. If this happens, I will do this, but if this happens, then I will do that. You know, Trying to stick to one bias, is difficult because the market is always changing. New things are always happening. One day could be bullish and look like longs, but that same day could be bearish. So it's always, having that quick reaction and identifying your levels. And if your levels break, then you have to identify a counter bias to that and, ride that counter bias. So the overall plan was seeing how price would react at this level, and if we would get a break below this level here at a close, and retest back, pull back up here, then I would take the market short, targeting the low of day right here. Coming into a market here on the M5, I do start trading at 950. So from 930 all the way till 950, this is kind of the price action we've seen. That rejection at that H4 order block level plus the SMT divergence. Then we actually get a break of structure here. So overall, my overall thought process on this is, okay, I was bullish on the day, but overall right now I'm getting bearish signatures. A break of structure fair value gap after tapping into a H4 order block level, H4 area of interest. Price is showing respect to that level. Price is showing respect to the bears. So why am I gonna keep a bullish bias if overall the market is showing weakness? That's exactly what happened. So, coming into a market here, I'm paying attention to not only the ES, but I'm also paying attention to the dollar and how does the dollar move. My overall weekly bias for the dollar was higher prices, and as you can see, the dollar came here, took out this low, and eventually it just started to kind of consolidate, but it wasn't pushing lower. The dollar was not pushing lower, and that was really the main factor that I seen from the dollar to really give me a better perspective to be bearish on the ES, because if the dollar is not pushing lower, that means, there's buyers down there. There's people that want, push the dollar higher, and as well as the fact that we did have a draw on liquidity higher on the dollar here on the daily, which was this buy side liquidity here. So overall narrative for the dollar was bullish, which was really good for my analysis to be bearish on the ES here. So as we can see, we have this level here. Let's see what happens. So price breaks to the level as I wanted. Overall, I'm being patient. I'm not trying to chase this at all. I'm waiting for price to come back into this fair value gap. So that's the plan here. I'm waiting for price to come back into this fair value gap, and I'm trying to see what does price do at this fair value gap. Does price come back into this fair value gap and then give me a signature that I like to see of it rejecting and push lower, or will price simply, come back into this fair value gap, push lower and then come higher? So that's the overall signature I was looking on this fair value gap. If I had a bearish bias on the day, 100%, I would have put a limit order here on the fair value gap, stop loss up here, and, target the lows. But since I did have a bullish bias on the day, I seen the setup and I wanted to see how does price react at that level. So we have this bullish fair value gap here. So I'm watching it. Price comes back into the bullish fair value gap. And then we get this signature on this candle close right here where price came up into this fair value gap and then created this, bearish engulfing candlestick. On the next candle open, I actually went short. On the next candle, I went short here at 45.88. So as soon as the candle opened, I went short. Stop above the high. Stop loss down here at 45.78. And that was a 2R on the day. Having a bias, having a plan, but as well as understanding that not every day your plan is going to work out, and not every day your plan is going to be right. So creating a counter bias and, identifying your areas, and as that area broke, I was able to think quickly and think, okay, that plan, is not what I wanted to see. What is a new setup, what is a new plan that's presenting itself, and overall, one of my favorite setups, break of structure, fair value gap. I seen this, as it came back up here. I'm waiting for confirmation, and once I got that confirmation here, I went short, stop above the high, aiming for the low of day, 2 to 1R, and overall rest was history. That's gonna be it for a video, guys. I hope you guys learned something about bias as well as counter bias, and understanding the market is just a bunch of if then statements. That's all it is. If this happens, then I will do this, but if that happens, I will do that. And coming into a market with that approach, to where it's not one-sided, but you understand as the market develops, will take you far. I hope you guys like this video. Make sure to hit that like button, subscribe. I'll see you guys next time.